Hey all, and thank you so much for joining us today. We're going to be starting off with the dollar index on our Sunday market review. And as you guys can see, that the market did in fact move quite nicely down towards our key target level over here that we discussed last week. And in fact, came to test below the monthly pivot. So the last time we looked at this market was last week Sunday, and we were around this region over here. And as you guys can see, we had a very nice drop to the downside. Now, with all that being said, if we scale over into our lower time frames, such as our weekly, we can actually see that the market has not only stalled on our level of 96.50, but it also found this moving average over here as dynamic support. Now, bear in mind that we're not too far from using the pivot as a level of support, but even more so if we scale over into the daily time frame, what we can actually see is a very nice hammer that formed over here. Now, bear in mind, guys, we have a very nice hammer on a relatively good level of support in an overall market that is relatively close to its upward sloping trend line over here at the bottom. And the way I see it, I believe the market does have the capacity to continue going further down. However, I would argue that we could see the price running a bit further up, at least 38.2% of this trend over here. Now, bear in mind that we can only confirm this to be the end of the trend if tomorrow we have a very nice bullish candle closing over here, justifying that the turn is valid, and that we can then use that as a means of kind of measuring how deep the retracement might want to be. But based on my analysis, I do believe that the market has the capacity to run around this level over here, and that is going to be around uh, 97, I'd say 98, between 97.50 and 98. I would say that that would be a relatively good and decent retracement level around that region. So just a bit of a blip to the upside, and then the market ultimately will then look to roll over according to the analysis. Now, the alternative will be for the market to continuously just going further down, breaking this key support level, possibly even wanting to target these lows over here. And bear in mind that if the market does in fact want to target these lows, then what we've actually done is we've broken this overall upward sloping trend line, and as a whole we've broken this ascending channel, which means that the market does have the capacity to run even further down to perhaps testing these lows if it wants to. So that's the dollar index, and so for the week ahead, we currently on a crossroads. We're currently in a crossroads because number one, we have a reversal candlestick, and we could see a little bit of a retrace towards this level over here, and that could lead us further down. Alternatively, what we could see is a retrace testing this level over here, coming back to form a double bottom, and that could lead the market to potentially reverse. But we're gonna have to wait and see how the week ahead looks. Like I said, guys, my bias would be for the market to kind of build a bit of momentum to the upside, at least testing our 38.2 fib. Granted that tomorrow closes a bullish candle above this low over here, and that can kind of lead us all the way up to this section where we could see price potentially wanting to turn over. For the most part, if that's not the case, then we could see a continuation to the downside with regards to the dollar index. So that's the dollar. Let's move on to our next pair. Okay, guys, so our next pair is going to be the Australian dollar, US dollar. And as you guys can see that we're on a very nice level, previously support, currently resistance, with the market testing the monthly pivot. However, if we were to look very closely on my off-screen charts, we can actually see that we have a bunch of positive momentum in the background, both on the month, both on the weekly as well as on the daily. And so what I'll do is I'll actually jump straight over into the daily time frame. And what we can see is the market giving us this beautiful high test candle in the form of a shooting star, testing this key resistance point of view of 7,000, the level that we did in fact anticipate the market reaching by the end of this week. But the way the market gets there, we can see, but it's a bit wicky as the market gets to this key level of resistance. So this implies that we could potentially see a short-term reversal only to build enough momentum to move further up. So I would argue that the market does have the capacity to in fact pull down just ever so slightly if it wants to continue going further up. Now bear in mind that I stand behind these levels over here because this was previously resistance, and this level over here was a key level at this point over here. But there's nothing for the market to just give us a small pullback and then continue further up. But if the market does retrace towards these levels over here, this is definitely where I'm going to wait and see more market development in the form of candlestick formation, or other key factors of reversal, and that will justify an entry. So that is the Australian dollar, US dollar, and we will go from here to our next pair. Okay, guys, so our next pair is going to be the euro dollar, US dollar. And as you guys can see that we have actually gone all the way up to test the monthly 50 period moving average. And if we scale over down into our weekly time frames, the market did in fact break this pivot level over here. And what we suspect is the market could potentially want to retrace. And I highlighted this level over here, and we could retrace to 1250, between 1250 and 1200. And the reason I see this as a potential retracement is because the amount of momentum that kind of surged to the upside suggests that the market does in fact have enough capacity to at least want to pull back just ever so slightly to either retest this high over here. And based on that, we could then determine if the market wants to break that level and even going as far as breaking this key level of resistance over here. Now, I do know that a few people might anticipate a deeper retracement. But the only reason I kind of suspect a shallow retracement on this one is purely because of the fact that uh, the overall momentum of this market has been severely bullish. And this candle over here is also a relatively strong bullish candle. Now, we have one shooting star in the form of this specific high test candle over here. But if the market does give us a deeper retracement, excellent. That is fantastic. However, I would like to see the next day, in other words, tomorrow, kind of closing bullish as well. Sorry, kind of closing bearish as well to suggest that this is the high. And that will confirm that we're off to a bit of a run to the downside. But as it stands, I mean, I do see the potential of the market kind of just wanted to kind of run into this region over here, form a bit of candlestick formation, giving us a bit of a signal, and then running all the way to the upside at this point, at least till this point over here. Um, Ultimately wanting to potentially break this high over here. So that's what I see on the euro dollar. I think it's just a case of waiting and seeing. But if we do have a deeper retracement, the retracement that we can see the market potentially come all the way down to, I would think, is the 50% retracement. Now, the reason for this is because this 50% retracement lines up very nicely with these previous highs over here, and it will make for a good retracement in that the market will definitely give us enough to not only take a position at this point and take our first target off over here, and just that in and of itself will be a relatively good risk to reward. But in and of itself, it's overall moving with the trend of the market in terms of kind of wanting to break this overall kind of consolidating market that we've been finding ourselves in ever since June of last year. So, like we said, the market has been trying to break this specific resistance level at 1.1 at 1.14 for the longest time, and just a bit of a retracement could potentially see us doing so. And bear in mind, guys, if we break this key resistance, there's not much that the market can't do, because then we have a free range from running from this point all the way as far up as it needs to. But up until that point comes, we could see the market giving us a bearish sign to the downside. However, if I look at the momentum, we still have positive momentum in the background, and that definitely suggests that we could see a bit of upside potential during the course of the week. But that's the euro dollar. Let's go on and move on to our next pair. Okay, guys, so our next pair is going to be the pound dollar. Now, as you guys can see, that the market has been really keeping this key support zone over here very, very well. And not only that, we had a very good run to the upside so far since the month started. Now, last week, we could see that the market did, in fact, make substantial progress to the upside, breaking the key resistance level of 1.26, running all the way into our moving average over here. This is my 100 period moving average. And I suspect that we have the capacity to run all the way up to the monthly pivot. And if I go over into the daily time frame, I can actually show you guys that the overall target will be the monthly pivot. Now, the thing is, the market ran into this period, this moving average over here, and it kind of stalled a bit. Now, can we see a bit of a pullback? I'm sure that the market potentially wants to give us a pullback, but when it comes to the pound, it's just been in such a very, very choppy range that it's going to be very difficult to anticipate what the market's intention is. Because notice that we had such a strong move to the downside, but the way the market is moving up is not necessarily as fluent. If anything, it's a lot more choppier than anything else. And for that reason, I'm not ruling the pound out, most definitely not, but I am saying that I find that the way that the euro is structured and the way that the Australian dollar, US dollar is structured, it's a lot cleaner and it's a lot easier to read as opposed to this current price action over here. So it's not the most appealing price action, but there's definitely the potential in terms of momentum to see the market running all the way up to a 1.3 level of resistance, which is ultimately the monthly pivot. So that's the pound dollar. Let's jump over to our second last pair. Okay, guys. So our second to last pair is the US dollar CAD. Now, the US dollar CAD has been just moving all the way to the downside. And where it stands, as it stands right now, I mean, I believe that the market could run all the way down to its monthly pivot at this point over here at 1.32. So I'm actually going to go ahead and put a level over there because that's where we could see the market run towards. I do believe this is the instance. So let's just round that off to 1.32. And if we scale over into our daily time frames, we can actually see that the market does in fact give us a bit of a break of this key support level over here, and that's where I was waiting for the pullback, testing the pivot, and that's going to be where I shorted. But the market didn't pull that deep, but it gave us a bit of consolidation before breaking down further. We do have the moving average starting to poise itself to the downside, which suggests that momentum not only um, that, but also the moving averages is indicating that momentum is starting to shift, which means that there's nothing keeping price from actually reaching these lows over here. Now, once price does reach these lows over here, what is the option? Now, as it stands, the option could be for the market to give us a potential reversal. But other than that, I don't necessarily believe that it has what it takes to kind of reverse all the way up, breaking these highs over here. But if once we get to this point, we could see a bit of a run to the upside. Um, to measure that wouldn't make much sense at the moment, purely because of the fact that the market hasn't even given us a signal to suggest that this is where it's going to look to stop. Lord knows it could break this level over here to test these lows over here. So that's also on the cards. As it stands, I believe that the market has what it takes to kind of break further to the downside. A slight pullback is not off the table. I do suspect that we could have ever so slightly of a pullback just to kind of see the market continue running all the way over here. So if I get that pullback and I was to take the position, my first target will definitely be at 1.32. So that's the USD CAD. Let's move on to our final pair. Okay, guys, so our final pair is going to be the USD Japanese yen. And as you guys can see, we're just running straight into this moving average over here, finding heavy dynamic resistance. And if we go over into our weekly time frames, we're just hitting more resistance, even though that's a solid candle over there. If we were to go over into the daily time frame, you can start to see that momentum is starting to shift. I mean, if we get a bearish candle or bearish engulfing candle over here, that's a very strong signal to consider a reversal, because the overall market, if we were to go back over into the monthly time frame, what you can see is that this particular market is not giving us any clear direction. We can see that, fair enough, we do have this rising wedge pattern over here in the form of this flag to suggest a breakout to the upside. That's definitely something that's on the card. It's just that the way I see the current market, it's just such a messy chart. And it's not that I won't trade it, but from a swing trader's perspective, I'm definitely not in any rush to get into this particular market. Perhaps on the intraday aspect, I'll definitely move. And as you guys can see, I did in fact take an intraday position over here. And I was fortunate enough to close it with the key target point over here, eventually running the market all the way to that point. Um, Ultimately, the market ran even further where I could have closed a whopping 9.5%. But analysis said that's where I'm going to take out, and that's where I got out. But for the most part, guys, I mean, as you guys can see, this is one of those positions that if you could avoid this amount, if you can find something better, and I'm sure that you can find something better than this price action over here, that will definitely be the one that I'll look to swing, as opposed to focusing purely um, on a market that is so choppy. Now, a choppy market like this could result in a good day trade, perhaps, but in terms of a swing trade or a very reasonable long term position, I don't think that the market is in any way. In any position to kind of give us such a trade at this point in time. So that's my opinion with regards to the US dollar Japanese yen. But for the most part, guys, like I said, I'm keeping my eyes on the euro, and I'm keeping my eyes on the Australian dollar, US dollar, as I believe that that price action is the most cleanest. But not only is that the most cleanest price action, it makes a lot more sense if I was to kind of take those trades for a know a swing position. But I'm definitely sure I'll be finding some good runs, day trading positions on the other pairs. So yeah, I mean, guys, that is the Sunday market outlook. If you have any questions, please feel free to jot them in the comment section below. If you'd like to add anything else, please do so. I'm always encouraging guys to share their thoughts, because this, bear in mind, is just my opinion. For the most part, guys, I hope that the week ahead is going to be an awesome one. I hope that the week ahead is going to be a profitable one. And I do look forward to the content that we're going to be uploading this week. I'm so excited for that. But up until that point, guys, I hope that you have an awesome Sunday further. I look forward to chatting to you all soon. Cheers and bye for now.